Over the past few years, Jaguar Land Rover, or JLR, has accounted for 70 to 80% of Tata Motors' top line. JLR has been part of Tata Motors since 2008, when Ratan Tata was still going global. Tata Motors' largest business segment, JLR, has a significant presence in the European markets. This exposure should have boosted the sales of Tata Motors, but that did not happen. The European economy was already struggling with the aftereffects of COVID-19. It was struggling to get back on its own feet. A big blow was dealt by the Russia-Ukraine war, which was like a gut punch to the already weak economy. Due to the war and resultant sanctions, the price of commodities has gone through the roof. Rising prices, supply disruptions among other things have shaken European companies. Hence, having a large exposure in Europe has brought bad news for Tata Motors. Also, the lockdowns in China have impacted the business of Tata Motors. JLR has a joint venture in China. Hence, strict lockdown on the Chinese borders is another thing that will affect the company's share price. That brings us to the next reason. For the quarter ended 30 September 2022, JLR reported total sales of 88,121 units. This is 4.9% lower on a year-on-year basis. The sales have seen a sharp decline because of the above-mentioned reasons. On a sequential basis, however, sales have improved by 11.8%. In a press release, the company said improvement was lower than planned, primarily due to a lower-than-expected supply of specialized chips from one supplier, which could not be readily resourced in the quarter. Update. For the quarter ended 31 December 2022, JLR reported retail sales of 84,827 units. This is 5.9% higher on a year-over-year basis. However, sequentially the sales were down 3.7%. Number 3. Semiconductor shortage. Any electrical component in a car, beginning from crucial components like the battery to small parts like seatbelt tensioners, they all need a semiconductor chip. This has proved to be another challenge for the entire automobile industry and Tata Motors. The pandemic aftermath, geopolitical tensions, and slow manufacturing of chips have cumulatively caused the semiconductor chip shortage. Auto manufacturers have to queue up for chips, and hence their production has slowed down. No wonder semiconductor stocks in India are booming and are the talk of the town. So Tata Motors is in troublesome waters for the time being because of the global shortage of semiconductor chips. The silver lining is Tata Motors is getting into new agreements with semiconductor suppliers, and it is expected that sales will improve in the latter half of this financial year. That apart, the Tata Group is also in talks for semiconductor foray, so in the future the company won't have to bicker about semiconductor shortage issues. Update. Semiconductor shortages continue to dampen JLR's growth prospects. Its worldwide deliveries between January 2022 to September 2022 fell more than twice. This also marked Jaguar Land Rover's second steepest fall in over a decade. To overcome such issues, Jaguar Land Rover is engaging directly with the chip suppliers and entering into partnership agreements to improve visibility of supply in the near term. Further, the Tata Group has taken its next big leap in the semiconductor space by announcing to set up an assembly unit. Number 4. FII selling. Interest rates are rising in developed markets like the USA. This makes the emerging markets less attractive for FIIs because the risk-free rate of return reduces. Hence, FIIs sell their holdings in companies operating in emerging markets like India to return to the safety of dollars. The same has happened with Tata Motors. Foreign institutional investors, or FIIs, have been divesting their stake in Tata Motors since December 2021. FII's stake stood at 14.6% in the quarter ending December 2021. The stake was reduced to 13.7% by the end of the June 2022 quarter. This stake sale by FIIs added insult to injury. For more, check out Tata Motors' latest shareholding pattern. Update. In the September 2022 quarter, FIIs upped their stake to 14.13%. On the flip side, Indian mutual funds lowered their stake to 6.54%. Number 5. Price cuts for Tata Nexon. On 18 January 2023, Tata Motors repositioned its Nexon EV portfolio. It announced price cuts and an enhanced range of Nexon EVs. Nexon EV Prime XM has now been repositioned at 14.49 lakh rupees, which was originally 14.99 lakh rupees. The price range for all Tata Nexon variants is now between the range of 14.49 lakh rupees to 18.99 lakh rupees. Earlier the price range was between 14.99 lakh rupees to 19.84 lakh rupees. A price cut could work both ways. It could mean lower revenues due to the cuts taken or increased sales as investors get lured by the offers. Download guide. Discover 4 proven strategies for picking winning stocks. Entry of a new competitor. The above price cuts and range enhancement come after the entry of new competition. Recently, Mahindra & Mahindra launched a new electric SUV, the Mahindra XUV 400 EV. The all-electric XUV 400 will be available for booking starting 26 January 2023, and the deliveries will begin in March 2023. Owing to strong competition from a seasoned competitor, Tata Motors' share price is facing pressure. We recently wrote about how the Mahindra Group is making big leaps towards the electric vehicle segment. New big development. Tata Motors subsidiary. Tata Technologies filed draft papers with the market regulator on the 10th of March, 2023, to raise funds through an initial public offering, or IPO. Tata Motors will offload about 20% stake in this IPO. It has a 74.42% stake in Tata Technologies, according to the company's 2022 annual